Welcome to my channel. I know it's been a while since I've been on here, and I am back and I am not planning to go anywhere. So, as we know, there's a lot of things that's been happening with the government, with our president, all the laws that have been enacted. It's been crazy, as we know. So, this video is only about one thing. Yesterday, as we know, it was a big day. Yesterday was July 3rd. That's when the House passed the bill. What bill is that? Before I tell you what bill, back in January 1st, 2018, as you guys remember, there was a Tax Cut and Job Act, TCJA of 2017, which also called the Trump tax cut. Okay, it took effect, which was due to expire this year. So that tax cut did help a lot of people. It did decrease some taxes. We had the QBI for businesses. They removed the tax exemption, and it was a lot of impact on the tax system. But now, up until recently, Trump introduced another bill. Remember, the first one was under his administration, and this one is also under his administration. So, what is that bill? It is called One Big Beautiful Bill Act. I'm not gonna lie, the name is very appealing. One Big Beautiful Bill Act. It was passed by Senate on July 1st, 2025, a couple of days ago. And as of yesterday, the bill was passed by the House, where all the Democrats voted no for it, about 212 of them, and also two Republicans out of 220 voted no as well. So we had a total of 218 to 214. So the bill passed. Okay. So now today, the bill is expected to be signed by our president, President Trump, which will make it the date of enactment, which is called DOE. The date is important because many of the provisions contained in the legislation will become effective on the DOE. Okay, so what's in the bill anyway? It's about 900 pages. It has a collection of tax breaks, spending cuts, including Medicaid fundings that will be cut. We're not going to talk about that today, but that will be another video. And also other Republicans' priorities. As you know, Republicans, they have their own agenda, but we are not talking about that either. So let's get right into it. We are going to talk about the ones that will affect you for taxes, tax laws. Okay. So we have to determine how that will help us, how that would benefit us, how that will hurt us. So let's focus on that. So number one, I mentioned that earlier, is the QBI deduction. The QBI deduction is a tax break for mainly for the business owners. You get 20% of your net income. So after you calculate all your net income, whether you're an S Corp, whether you are Schedule C, the net income, 20% of it, you take it as a tax deduction. Okay, which is pretty good. But there are phased out based on the income, but we're not going to talk about that in detail. But this one will remain. It came into law with the TCJA, and is going to stay with the One Big Beautiful Bill. Okay. And so everything has exceptions. So everything I said, there are exceptions, there are phase out and restrictions. So number two is there's no tax on tips. That might sound good for a lot of you. So any tips that you made up to $25,000 with certain industries, you would not pay any taxes on that. I'm sure a lot of you don't pay taxes on it anyway, but this time it's going to be legal. Okay, so, and also there is no tax on overtime. That's the third one, no tax on overtime. We know we love the overtime, right? So now a lot of people have said more overtime, it's like more money to take out of your taxes. So the taxes for the federal income tax, there will be no tax on overtime up to $12,500. And number four is the additional senior deduction. So at some point, the bill was supposed to not tax Social Security, but the final bill is they're going to remove an additional $6,000 of deduction for seniors over 65 years old. Again, there are phase out, there are exceptions. And number 5 is the car loan interest deduction. It's not a credit. You know, there's a difference between credit and deduction. The deduction reduces your taxable income. The credit gives you dollar per dollar tax break. So this will be a deduction up to $10,000. We gotta know, is that really beneficial for us? How much of a car do we need to buy to really get $10,000? Okay. And the next one is SALT, not the salt that we eat, SALT. Yeah, it's spelled the same way. It's SALT. What is SALT? SALT is the state and local taxes, SALT. So it could be taxes on real estate. As I said, it's state taxes, income taxes at the state level, the local taxes. And there are a few states that do have SALT. Florida is not one of them. That's why we have a lot of retirees coming to Florida to avoid the state income tax. And we have California, New York. Those states do have state income taxes. Okay, so for SALT, the limit was $10,000, and with this new bill, it is now $40,000, which is due to expire in 2030. And the next one is the 100% bonus depreciation. That one we had in the 2017 TCJA, and it's gonna remain. But the good news for this one, any asset that was placed in service back in is gonna go back to January 19, even though we're in July now. So if you put the asset anytime after January 20th, 2025, you will be qualified. But you have to determine, is it best to take the 100% bonus depreciation? You have to know, this is where you have to get with a tax professional to determine what works best for your situation. Next one is the Section 179, which is related to what we just discussed, the 100% bonus depreciation. It's allow, again, 100% deduction. And again, it is limited to certain income. We have to understand that as well. And it is up to $2.5 million. Nice, right? And the last one we're going to cover today is the Green Clean Vehicle Tax Credit, which currently it's about $7,500 for newer vehicles, and I believe it's about $4,000 for used vehicles as a tax credit. And that one gonna continue until end of September of this year. Starting October 1st, it will not be qualified. So they're taking that out. They just give you a few months of extended time to take that credit. Okay, so there also are some stuff like some tax laws that there were no changes or little changes, like the standard deductions, the tax rate, the EITC, the Earned Income Tax Credit, or the dependent credit. Those, they change for inflation. So there will be an increase, not big increase. It's not really because of this bill. It's really every year they change it due to inflation. They give you a little increase. And also the mortgage interest, as you know, it's been limited to $750,000. Okay, so it still remains the same. Okay, so these are the things that I wanted to share with you, how the bill will affect you. And I wanted to tell you what's in the bill. I will be posting more videos to explain some of the items on there so you can determine, would it be worth it for you? I mean, is it beneficial for you or would it hurt you? We don't know. A lot of people say they're taking money from the poor to give to the rich because of that bill. And really, there's a lot of changes that will impact America, not just in the tax law, all around. Okay. So again, we are now in third quarter, which is July. So there are certain things you have to determine. It's time to do your tax planning and plan to see how those changes will affect your taxes and how you can take advantage of these things. You have to determine with that tax planning. You cannot wait till next year and say, okay, tax professional, how would that affect me? It's already too late. Let's plan right now. It's not too late. Third quarter. There are a lot of things we need to do for this quarter. Okay, thanks for tuning in. So today, let's see if our president will sign the bill today. Happy 4th.